All right, good morning, everyone. Today is Thursday, June 9th, 2022. The time is now 8:20 a.m. And I want to do a quick early morning market review just to update you guys on pretty much nothing. Here's a daily chart of the Dow Jones futures. And as I've been pointing out all week, price action is stuck between a range between the 20-day and the moving and 50-day moving average. Price action has been stuck in this range. Even though the price it's getting tight, the price actually getting tighter and tighter and tighter. Between the moves are getting more smaller and smaller and smaller, which signals that there's going to be a break one way or the other, probably in the near future. But there's something just to keep in mind. So right now we've been stuck in this range since about May the 27th. Today is June the 9th. So we've been stuck in this extremely tight range on all of the major moving averages. As they look at the daily chart of the Dow Jones futures or Dow Jones E-minis. Here's a look at the S&P E-minis. Again, see the same tight range that price action has been stuck in for over a week now. Here is NASDAQ futures. Again, still range bound, been range bound. The NASDAQ has been range bound, probably a little bit less, but still stuck in this tight range. And the Russell E-minis or Russell futures as well. We are still range bound, folks. So it's a whole bunch of nothing. Now, today's Thursday, so we could stay range bound. Tomorrow, though, if we stay range bound today, tomorrow is something to pay close attention to because we have CPI numbers. CPI data that comes out at 8:30 a.m. tomorrow morning. That could be market movement. And then also next week. Next week we have Fed speak and Fed decision. Fed rate decision on next Wednesday. That also could be market movement. So we will break out of this range eventually. Just a matter of time. So as of right now, it's not much going on in the markets. We are just range bound. As far as crude oil, still in a steady uptrend as for right now. This is a daily chart of crude, so we're still creeping higher. And again, getting ever so close to this 129 level. If for some reason we hit that 129 level, folks, I can all but guarantee that we're probably going to have a pullback from that level if we make it that far. Again, that is going to be a ceiling, temporary ceiling for crude, because that was a resistance level and we tagged it and pulled right back down. So normally when we hit resistance a second time around, normally it doesn't break straight through and continue higher. We got to see what happens. But if it does not break through and continue much higher, it could break through a little bit. Then we'll probably see some type of pullback. And then ultimately, whenever crude settles down from this recent rally that we've been on, if the crude settles down and possibly find a way to continue higher, ultimate goal, I think we can see prices break above that 147. So that could take the rest of this year to play out, but we have to see what happens. But as of right now, crude is still in an uptrend, but it is approaching, getting closer and closer and closer to that 129 level. 129 that we hit back in March of this year. Crude is trying to creep up to that level, which will probably be a level of resistance. All right, I think that's all I have for you guys, folks. I'll show you one more thing because there's not really much more to talk about since these markets have not been showing us anything worth taking a hold of. It's just been range bound all week. Here's the VIX. So we look at this VIX daily chart. I told you guys how The VIX is probably giving us some type of precursor of what we could expect. As you see, prices of the VIX sitting right on that 200-day moving average, folks, on the daily chart, with the momentum indicator, the TTM squeeze, showing that the downward move is becoming exhausted. You got these yellow bars starting to form on the below the zero line of the TTM squeeze, which is showing that this downward move is exhausting and the momentum could be shifting to the upside. So we'll have to see how that pans out. But right now, the VIX is resting, just sitting there, just holding support right at that 50-day, right at that 200-day moving average. Okay. So right here, we are just holding support right on that 200-day moving average. The minute if we see the VIX get a bounce off of this 200-day and march well above its 50-day, then we know we cooking with Crisco. Okay. All right. So that's all we got to look forward to, folks. Again, pay close attention to VIX is resting on its 200-day, and pay close attention to the overall markets. They have been range bound all week, and once the range breaks, we're off to the next story. All right. Till next time, I will see you guys on the next video.